Okay, first of all, I would like to, really thank ICAP and especially the APRS team, Ajlal Saab, Ashfaq Tola Saab, who's heading the program, and Ajlal Saab, the director for the APRS, and, all of the ICAPs, NRC, and all the team who have pulled together this wonderful program. Uh, Seriously impressed, with the thorough coverage for all the accounting standards. That's kind of the bread and butter of all of our accountants. And I think the QCR program is has a very long history in Pakistan, and that's the initiative of ICAP. I think going back decades, actually, when actually there was no other accounting body was actually doing all of these such stuff. And then move forward. There's a lot of independent audit regulators come into play. My brief objective of the slides will be to give overview of like what audit oversight board is, why it was constituted, what are the key kind of functions, and what are the areas that we are looking forward. And of course, these accounting standards, these are the main things that, an auditor ensure their compliance. It's the responsibility of the companies to prepare their accounts in accordance with these IFRS. And it's the responsibility of the auditors to check that. And I think over here, then this comes the role of the reviewers, both from the QCR perspective and both from the APRS perspective, that to, check and ensure their compliance, that, all these professional standards are, complied with. So that's the kind of the way. Okay, just a brief overview, like why this independent audit oversight system was introduced. Um, the professional accounting bodies, they were taking care of all of these regulations. um, but the main factor was the importance of this financial reporting. That all of the stakeholders, they primarily rely on these audited accounts to make their decisions. And if you think about it, for investors, the whoever invest in the stock market, they look at those numbers, the profit before tax, what's available, earning per share, and all those numbers. Like as an individual, when we invest in those companies, we look at those numbers. So the credibility of those numbers is very important for us, and if it is being audited, that gives us a comfort. And so that is the one area where the financial reporting is very important. um, in Pakistan's environment, there's a lot of push at the moment to do privatizations, for the lot of state-owned enterprises. Again, when you are pitching your all the those views before the international investors, they look at the credibility of those numbers. And if there is a trust in those financial reporting numbers, the audit on those numbers, that raises their confidence. So that is is also when the audit, the financial reporting, it comes under that scanner. And similarly, tax collection, uh, in the public sector, and the amounts of revenue available, and because that is collected on your profit before tax numbers. So whatever your tax returns are, the starting point always is your profit before tax, and then you make certain adjustments and work out your taxable profits, and then you pay the tax revenues. So in Pakistan, all companies are required to have audited accounts once they file their tax returns. So you have to give them that kind of assurance. So and just imagine the type of losses which can be incurred if there is like 1 rupee, for example, understatement. So the standard rate in Pakistan nowadays is 29%. So for 1 rupee, just imagine the 29 paisa gets lost. That's a very huge amount, and that's even before all those other top-ups. Like for example, if you're a banking companies, then the rate is even higher. Then you have to pay the super tax and all those sort of things. So it means that in every company, to be honest with you, it appears that the government is actually an associated company, because they are, even the biggest shareholder might not be getting such kind of returns, which the government revenues are dependent on those numbers. Not commenting on whether that is fair or not, but that's what the system is right now. And that's the collections that needs to occur, and these are the losses, real losses, that happens to the exchequer if the financial reporting numbers are not accurate. um, so this we cannot emphasize enough the financial reporting's importance and integrity of audits. And I just also like to point out to you, um, sometimes before, there was a lot of debates and litigations, when there's audit, other than the members, the shareholders, the people always used to debate like whether the audit is providing them a direct insurance, because we don't have a contract with the auditors. But I don't know if you come across the recent definition. The primary users and the secondary users of the financial statements are clearly defined in the IFRS. So primary users are your investors and your all the lenders who are lending those monies, the banks and all those people who are giving lending and financing to those companies. So these are defined as primary users. So when you're auditing, when you are preparing those financial reports, I think you shall keep in mind the type of decisions those primary users actually make. So it's not only the shareholders now. Although your reports, auditor reports, always says the auditors report to the members, but the financial reports, the accounts, the financial positions, the profit numbers, they are not only relied by the members, the lenders are also the primary users. So it's written and it's defined in the definition within the IFRS. So that's very important. We keep in mind that. So that was all the scheme, but due to all those issues within the financial reporting systems, and we saw the things coming down, like for example the Enron, WorldCom, even in the recent, like the last 4 or 5 years in the England, the UK, there are a lot of very big giants like BHS, Carrollton, so all of these companies actually come down to their knees. And when it what was the issues, they boil down to the real financial reporting issues. For example, the in BHS, the lack of provision, the Sufyan was just explaining the retirement benefits. So all of those retirement benefits, lack of provisions for those pension liabilities were not appropriately recorded and provided for in those books. And that led to a big black hole in their accounts, which led to seriously meltdown of those companies. Not only those their companies, but then they have to default on their creditors, the employees have to be let go. So it has really widespread repercussions in the public interest. So when something goes down, then everybody questions what the directors were doing, what the auditors were doing, and who was taking care of in the public interest. So when those questions started to come through, the globally, I think the consensus was that we have to move from the self-regulation to the independent audit regulators mechanism. And I think the most of the world has now moved on. In our region, India, Sri Lanka, they both have now completely established independent audit regulators, and they are now even member of the International Forum of Independent Audit Regulators. That's basically a standard setter for the independent audit regulations in the world. There are 55 jurisdictions who are complete member of that forum. In our region, India and Sri Lanka are their member. In India, NEFRA, the National Financial Reporting Authority, it's established under their company law provisions, is fully functioning and is fully member of that body. In Sri Lanka, that is since a long time ago. So Sri Lanka Accounting and Standards Monitoring Board, they are fully, kind of operating in that arena. So we are currently not a full member of IFIAR, but we are working towards that. There are certain matters that we have to take into account before we fully comply with those standards, and for that we need certain changes in the legislation and the way they kind of we operate. We are working with all the stakeholders, SEC, ICAP, and everybody, to move forward in that area. So that's the just a little background that why we are what is the concept of independent audit oversight. So when it comes to Pakistan environment, I think before establishment of the Audit Oversight Board, ICAP, and Quality Assurance Board of ICAP, they actually fill that regulatory vacuum, and they ensure the audit quality through their programs, the QCR, and now this APRS, which has now plugged all the gaps, from that perspective. So if ICAPs that program or the QABs that QCR program would not have been in place, then AB would have to start from a very low quality base. But with those programs in place and with the initiatives of ICAP, that we have fully adopted all the auditing standards, whatever adopted by the IASB. And similarly, from financial reporting purposes, we have always complied with IFRS. So that also gave us a baseline, that we have the right standards and a good mechanism of supervision through the ICAP and its QCR program that basically gave us a very good baseline. So just giving a little insight. So it was 1987 when this program of ICAP initially started through a QCR committee process. In 1998, then the QAD, the Quality Assurance Department, as a full-fledged department, was established in the ICAP. And then the framework, the first framework was launched in 2003, which was amended later on. In 2005, that QCR committee was constituted as a full-fledged board, with having participation from different regulators as well. So certain members are nominated on the Quality Assurance Board from SEC, State Bank, PSX. So and then members and the chairman, they used to nominate from the ICAP side. So that was a cross-functional body, was operating since 2005. But because there were observations and comments from international bodies, and we were not fully compliant with those standards, IOSCO, World Bank, everybody, they started to point out, that Pakistan really needs an independent audit oversight board, which is fully independent from the audit profession, to work in line with like how other bodies, how other jurisdictions are taking it forward. So kind of like all of the European Union, all of the American side, so they have fully converged and accepted that or independent audit oversight models. In US, it was it was the starting point where the PCAOB, the Public Company Accounting Oversight Board, was established in parallel with US SEC. Over there, AICPA still continue to have their peer review program, but in addition to that, PCOB also operate, their own independent audit oversight function in the US. Similarly, in UK, the model is slightly different. The UK FRC is kind of the overall audit regulator, and they kind of delegate the non-public interest entities audit supervision to the accounting supervisory bodies, the England, Wales, and Institute of Chartered Accountants of Ireland, Scotland, and then they kind of oversee their operations. But for the public interest entities, it's the UK FRC who's completely responsible for their oversight and inspections. So in Pakistan's, the model was established, in 2016 by adding a chapter in SACP Act. It's the Part 9C. So it's a kind of It's a collaborative model where we have still the professional accounting body's role as well as the independent audit oversight function as well. So because we had that good baseline through the QCR program already established, so it is using the strengths of that system, and then also intervene wherever there is requirements to intervene in the public interest. So one of the function of the AOB was to review the QCRF framework, and we did at the AOB level two very comprehensive reviews. One was in 2019 when the 2015 framework was, kind of upgraded and it was changed into 2019 framework. It introduced a lot of significant changes, kind of revamped the governance structure of the Quality Assurance Board in 2019, uh, you know, uh, kind of outline, some milestones for the QCRF. So recently, we also, again did a review and revamped again the quality control review framework, and now it's the QCRF 2024, which is going to be implemented from 1st of October 2024. The ICAP Council has adopted it. EOB has approved that framework, so it is going to be operational. And I understand the QAD team, the Bilal Sheikh, Fahad, so they have gone through up and down in the country, and sensitize all the audit firms. ICAP has also issued communications in this regard. So the framework is on the website of both Audit Oversight Board and the Institute of Chartered Accountants of Pakistan's website. So you can download that. There are significant changes into that framework based on our experience of the QCRF, and looking at other jurisdictions, how people are taking it forward over there. Um, just kind of this slide actually summarizes what I explained earlier. So the regulatory model in Pakistan is we try to summarize in that, if you look at the picture on the right side, where audit oversight has an oversight on the quality control review framework, and then it has a inquiries and inspection functions. It has oversee certain functions of ICAP as well, uh, as far as the QCRF is concerned, and as far as the auditing standards adoption is concerned. So, but as far as the auditing standards are concerned, all of the auditing standards which are adopted by the ISB have been fully adopted in Pakistan. So there are actually no gaps within that environment. Recently, the Code of Ethics that institute is has trying to align with the ISBA's recent Code of Ethics, which they have published in 2023. I understand the ICAP has run a number of workshops with audit firms, with the profession, a lot of feedback coming through. At AOB, we have also given some feedback to ICAP on that. Other bodies have also given some feedback. There are fundamental changes around that. So our standards and our code are actually in place. I think it's the more important matter is the implementation of that, and overseeing implementation of those frameworks. That is more important from our perspective. So just building up on that, so if I kind of categorize the functions of AOB, it's basically these four buckets. The registrations of audit firms. So how we register the audit firms. It's a kind of a license that we issue, which enable the audit firms to carry out the audit of public interest companies. So ICAP basically issues the practice certificate. Then we have a mechanism to quality control review those audit firms through our robust process. And after that, once those eligible firms are in place, then there is a registration process which is at the AOB, which basically primarily relies on those earlier mechanism. I will go into slightly detail into that topic. Um, then the key function is the inspection and inquiries. So we also rely not only for the registration purposes on the work of the QCRs and the QAB and ICAP's work, but then we also leverage, for our inspections and inquiries, the work of QCR. Because, if you think about it, if the QCR has already looked at some of those stuff, we need to avoid, we need to minimize, the duplication of the efforts. And then if there are gaps, then, the EOB also go into the field and, conduct inquiries and inspections from that perspective. I will also explain that slightly in more detail. We also review the, perform a systematic review of the QCRF, how, whether that framework is fit for purpose, if there are any changes are needed based on the experience, because based on our reviews, based on other, issues and challenges which we come across for the QCRF purposes. And then the last but not the least is the enforcement function, because as a quasi judicial body, audit oversight board as a regulatory body has the powers to impose sanctions on the audit firms who fail to comply with these requirements, both to create a deterrence and create a reformative vision in the in the country, that the audit firms are both are cognizant while they are conducting their audits, at least for the public interest companies. So that's the regime, which I'll go into a little bit more detail. So this just gives you a slide, gives you a horizon and the population. So this is kind of the recent data which our team at EOB pulled together. So as of now, maybe slightly, up and down, but it's the total audit firms in Pakistan are about 700, 686 to be precise. Out of that, 129 are QCR rated audit firms, and then EOB registered audit firms are around 82. And out of those 82 registered audit firms, there are 60 audit firms who actually signed one or more auditors' reports of a public interest company. So we can say that 60 audit firms are the ones who are engaged in the audit of the public interest companies. And similarly, the data for the practitioners is, the actual chartered accountants, the actual audit partners who are doing the practice is at the bottom. Roughly about 1,200 audit partners are in Pakistan, which have a certificate of practice from the ICAP. Out of that, 597 are part of those 129 audit firms which are QCR rated. So roughly about middle of that, 600. And then out of that, about 300 partners are registered with AOB. But out of those, about 183 partners are the ones who are actually engaged in the audit of public interest companies. I'll go into the definition of public interest company, what it includes, and some questions around that as well. So that's what you call the population. That's what our world is. Over where we have to ensure and monitor, and this APRS program has its kind of a gap which prior to that program there was, because just look at that number, 686. So these are the total audit firms. 1, 2, 4, 3 other audit partners who were practicing, but only out of that 129 were QCR rated. But of course there were a process of investigations in place in ICAP, but there was not a systematic process to monitor these programs. It was very important that we put in place this APRS. And I understand the APRS team is now working very hard towards it. They have identified some areas where improvements are required, some areas where actions are required, to send a message that APRS team is now monitoring this area. And I think the overall objective, we shall be kind of look at it from a constructive perspective. Our profession, our community, audit profession, chartered accountants, they're very compliance oriented people. So once we point out those things to those community, that, the ICAP, APRS, QAD, Audit Oversight Board, all of that are, identifying those things that kind of bring those improvements as well. If you've done a mistake, you know, just learn from it. And then, we kind of try to avoid those mistakes going forward. And it also helps other people to look at those results, look at those, issues, and then learn from that, and then avoid those mistakes. I think they have done a wonderful job. The QCR checklists, that what are the things which inspectors look for, are available on the ICAP's website, which gives you a fairly good idea, they very nicely summarize, the key expectations from the auditing standards. Of course, we used to have those IFRS illustrative financial statement. We used to give us some idea, but for, these checklists gives a good hands-on, key expectations which the auditing standards, require an auditor to do. So I think you utilize those, from that perspective, and that will, ensure the compliance going forward and will assist you. Of course, there are technical department of ICAP. If there are certain questions, you can always, approach them, and they can assist and, help you around that as well. So going forward, so that's the list of audit firms which are currently registered with AOB. Those 82 firms which I mentioned to you. So the last time the register was updated, 19th of August. The register and the list remains available on the AOB's website. Like you can see on your right hand side, and there's a link on the bottom of it. You go to AOB's website, aob.gov.pk, and then you can find out the list of those order firms. This slide is, a little important, that what is the public interest company? I keep on referring the public interest company. So what is a public interest company? So interest company is actually defined term, and it is laid out in the Companies Act, in the third schedule. It basically includes listed companies, all of listed companies which are listed on the Pakistan Stock Exchange, or the entities whose securities are listed on the PSX. So all of those are, covered in the public interest companies definition. But then there are certain categories of companies which are also included within the public interest companies definition. And it includes primarily the public sector company. Again, that term is primarily defined in the company law. It has, a little of, little variations, but if you look at that, if I try to summarize it, I think it's if the government, or federal government or the provincial governments owns or controls a company, by holding more than 50% shares in it, that kind of, falls within the definition of the public sector company. But then there are other criteria as well, like you can appoint the directors and all that. So, that also can make you fall under the definition of the public sector company. The public sector companies are also required to, then follow their own code of corporate governance rules, and, and then auditors are required to issue their reports, thereon as well. So these public sector companies. They can be sometimes, duplications. A company can be a listed company, at the same time it can be a public sector company. So think about OGDC. So OGDC is a listed company, so at the same time it's a public sector company as well, because government owns more than 50% shares in the OGDC, so it can be in the both buckets. So then you have to comply with both the, the relevant standards and the relevant codes. But, for the PIC's definition, it can come within that. So accordingly, going a little bit further, is the entities which are registered or licensed by the SEC. They have NBFC rules. So asset management companies, pension fund managers, REIT management companies, NBFCs, which are deposit taking, Modarba company, insurance. So these are primarily the companies which are NBFCs. If you think about it, they are like financial, an area of financial services companies, which are also covered, within that part, because these financial services companies, they have a face towards public. You accept the deposits or you lend the money, people invest in you, and you manage the public finances from that perspective. So they have a public interest into that. um, just one question which a lot of people asked us recently was, if such companies, if they hold a license but they're not operating, or they're not operating to a particular level, whether they will be classified as public interest company. So for example, think about it. If there's a Mudarba company, there is a REIT management company, but they haven't launched a REIT scheme as of yet, shall we classify them as a public interest company or not? So if you look at the definition, if you look at the overall environment, if you got a license and that license is still you're holding, you are basically a public interest company, because you can launch a REIT scheme in a very quick moment. And so that's why there needs to be a particular requirement that you prepare your accounts into that, and then you get audited in accordance with that as well. So this 2A, the securities brokers, who are basically kind of the ones who are holding custody, are also recently included in June 2024 by the SEC within the definition of public interest companies. Okay. The third category is the companies which are, is the banks and the microfinance bank and banking companies, including the foreign companies, which are kind of operated by the State Bank of Pakistan. So they are also included within the definition. So then they were, in 2020, there was the sugar companies. They were also introduced within this category as well. So that is the broader population. So once we look at that, the auditors population, so then if we look at the sort of companies who needs to get audited, and where they have independent audit oversight. So this is the population which where we need to focus when it comes to the independent audit oversight, because it's the commission, is the Companies Act, which actually define the public interest. Other than that, within other than these companies, there's still public interest involved, but you have limited resources for audit supervision, for QCR. We don't have unlimited resources, so you have to categorize certain companies which are high on the agenda. And I think so these are the currently, as per the law, these are the companies which are currently classified at the Companies Act. Okay, who can register with AOB? It's the Part 9C of SEC Act, and then AOB operations regulations. They gives an idea and the process and the code, like how you can get registered. So on the top, it's kind of the population who are eligible to get registered, and the light green kind of explains the procedural requirements. So the yellow is the basically the eligibility criteria. So you need to be a audit firm which is a chartered accountant, holding a proper practice certificate under the C Ordinance 1961, and you must meet the basic criteria of being an auditor. If you look at the Companies Act, especially Section 247, it defines the qualifications and disqualifications, so which basically lays out the appointment criteria. So there are certain auditors which are disqualified. For example, if there is any conviction, and the 10 years have not been elapsed, so that is, person who's disqualified to be an auditor under the Companies Act. Similarly, there are certain other criterias which varies from company to company. For example, if you're holding shares into a company, then you're disqualified to be appointed an auditor under that, for that particular company. You need to continue to meet that, both qualification and disqualification criteria to be eligible to be an auditor. So if a person is not eligible to be auditor of a company, he cannot be eligible to be registered on the by the audit oversight board. So that's the two things: the C Ordinance and the Companies Act. These are the two primary laws which provides the enabling environment for the auditors, lays out their eligibilities, their requirements, who can be an auditor in Pakistan for a company. So these criteria must be met all the time. So if somebody is, no longer qualified, or if he has foregone his practice certificate, or ICAP has taken it back, so that person immediately becomes, his criteria just goes away. Then he is no longer authorized to carry out any audit. And the other thing is that the person, or the audit firm, they need intends to carry out audit of public interest companies. So before your registration, you cannot carry out audit of public interest companies. But not all those 683 companies, audit firms, and those 1,200 audit partners, they need to register with AOB. So only those audit firms, only those audit partners who intend to audit public interest companies, they are required to register with the Audit Oversight Board. And then such firms are required to go through under a supervision. So that's why we encourage only those audit firms who really wants to engage in order for public interest companies. They shall only register with AOB. If you are not intending to carry out order of public interest companies, we then you should not register actually with Audit Oversight Board. It's not a mandatory registration. And we also do not encourage people who do not want to carry out audit of public interest companies to get themselves registered with AOB, because that puts pressure on the QCR program, that puts pressure on the QCR, the audit oversight monitoring aspect as well. So it is only for the auditors who wants to engaged in audit of public interest companies, they shall get themselves registered with Audit Oversight Board. That's the third thing. The fourth thing is that then before you get registered with AOB, not all of the audit firms, which are the 623, they can get registered with AOB. Only those audit firms who have a valid satisfactory QCR rating and their audit partners have gone through that engagement review process, they are the only ones who can apply for AOB's registration. That's the bare minimum criteria laid out in the Part 9C. It is also kind of explained in the QCRF framework. It's also explained in AOB operations regulations. So these are the four main ingredients before somebody can register with AOB. And the procedure is very simple. Once you have these ingredients, you just need to get a recommendation letter from QAB of ICAP. You need to complete a simple online form, get that recommendation from the QAB, and then you deposit a nominal fee, which is per partner. It is specified in AOB operations regulations in Schedule 3, and then you basically submit all of that to AOB. And then we just process it very quickly, within 1 to 2 weeks time, and then we process that and we put your name and particulars of your audit firm's details, including your audit partner's details, on AOB's registered, for that perspective. Uh, so once a firm, guys, is registered with AOB, then these are the conditions of registrations, that you have to maintain the QCR rating and the QCRF. That's the primary condition. Then you have to continue to comply with all the laws and regulations which are applicable for the audit of public interest companies by the audit firm and its partners. Then you have to file annually, annual return, which we call Form A. It is specified in the Schedule 2 in the AOB's operations regulation. It's not a manual form. I'll explain, slightly in more detail. It's an online tool. It's just to make sure that we address and we collect that data. Then you have to deposit an annual fee. It's again very nominal fee that you have to pay. Then you have to continue to see that if there are any changes into your composition, like new partners are added, or partners are being removed, or there are certain other changes in your structure, then you need to notify those changes to AOB through that process. This is the number 6 is the recent amendment that we kind of introduced in 2024, is the way we want to encourage only those companies who are actually engaged in the public interest companies. There are certain times some companies comes and they register with AOB, but then we have introduced this condition that at least for the last two consecutive years, you must sign at least one public interest company where you are engaged as an auditor. So, if you are not engaged as an auditor for the last two consecutive calendar year, then you basically do not fill that condition of registration. And for the existing firms, we have given some time, so from the next year, January 2025, this regulations will kick in. And then if a company hasn't been engaged in a public interest company for the last two consecutive calendar years, then you do not fill that criteria, because you are actually not engaged. And then you can still be QCR rated, you can still be holding a valid certificate of practice, and you can cater for all the other companies other than the public interest companies. But at that time, we will we will take you out from that registration stream. So that is the conditions of registration. These are the couple of things which you must not do before your registration is complete. So please try to understand that the AOB's registration, it is one of the requirement in the Code of Corporate Governance for the listed companies. It's the requirement under the SCCP Act Part 9C, that only those audit firms who are registered with AOB, they can only hold the office of auditor. They can basically sign an auditor's report. So if you are holding a only a practice certificate, but you're not QCR rated, you're not registered with AOB, you must not sign those companies auditors report. It has serious implications, because these are the type of companies we are talking about, who have a significant amount of public interest involved in them. And if you carry out those audits without being eligible to carry out those audits, then it has serious consequences. It raises questions on the validity of those audits, because if you're not eligible to carry out those audits, what is the what is the legal validity of those audits will be in the eyes of the law if anything goes wrong. So you must not consent or hold office of auditor. You shall not carry out an auditor. You shall not sign a report of a public interest company if you are not registered with AOB. You shall not represent as an AOB registered audit firm in any confirmation to the PICs. So especially in the listed Code of Corporate Governance, there's a statement of compliance. An auditor is required to confirm to the public interest company that they are holding a satisfactory QCR rating, as well as they are registered with Audit Oversight Board. So if you are not, please do not confirm to those those companies. And as a reviewer, we shall must look into that. So especially the ones who are already registered with us, they shall not be an issue for them. But especially for the APRS scheme, because these are the companies who are neither in the QCR regime nor registered with AOB, and they are outside that regime. So over here, the risk of such issues is much higher. We recently identified certain issues around this area. The EOB has taken actions. ICAP has also issued certain communications to all the practicing members around that, to sensitize them about this and the importance of this issue. But for APRS team, I think this issue is also very important, because this is the population who are actually neither QCR rated nor registered with AOB. So the risk actually lies within this population. So as a reviewer, if you are looking at any population, you must look that those companies are not signing any audit of public interest companies. And if they want to carry out audit public interest companies, we shall encourage them to get themselves QCR rated. It's not a very difficult process. You need to build up those internal controls, system of quality control within your audit firm. Invest on that quality, offer themselves for the QCR, get yourself QCR rated, and then you can just register with AOB. If you think you are already at that place, then the QCR shall not be a problem for you. So that is, but I would be emphasize the APRS team, and as a reviewer to you as well, that please look for these issues when you look for that. EFRS, Audit Firm Registration System. So initially we used to have a manual system. People used to send us forms and manual forms, and a lot of data was manual. But we have automated the system, or audit firms registration system. So if somebody wants to register with AOB, all what they need to do is go on that online system, register with themselves with authorization from an audit partner, upload that form, and then we will create your account. You have to complete a simple a form, includes your firm's name, address, your partner's detail. And once you completed that form, download that form and just email it to QAB for requesting for a recommendation, and then send everything back to us, and then we will process your application fairly soon, unless there is some issues from that perspective. Similarly, the same system is again used for the annual reporting. I mentioned you that as a part of condition of registration, that's the initial registration form, but then every year you have to, submit an annual return. Over there, you have to list all the public interest companies audit which you have signed over the last calendar year, and then all of that data then come through to us through electronic form. We utilize that data for our oversight and for our monitoring purposes as well, to identifying, some risk areas, and how we can, monitor the QCRs and perform our own inquiries and scrutinies as well. Okay. The QCRF 2024, I briefly mentioned earlier. So, that was, we have recently, kind of implemented. ICAP has adopted that and have sent out the communications. The program is on the website of both AOB and ICAP. We have, done through extensive consultations and workshops with QAB and QAD, Quality Assurance Department's team. We held then a special committee and made some, meetings with ICAP officials as well, the leadership of ICAP, and then finally we issued that framework, which is now going to be effective from the 1st of October 2024. So we have the APRS scheme, then we have the similar equivalent scheme as the QCRF scheme. So in the QCRF, the responsibilities of the firm, I think they are clearly laid out, but some of them which I just wanted to emphasize was, a couple of them which I would like to highlight over here: the timely submission, the list of your audit engagements, they must be submitted on a timely basis. So firms needs to get active. As you mentioned, as I highlighted earlier, it's a condition of registration to maintain your QCR. So, if your QCR is, is not valid, is expired for a very long period of time, then we will take certain actions against that. And we are deliberating those matters with QAB and ICAP and everybody. But, we encourage the firms that, they shall be proactive and timely, get themselves QCR rated, from that perspective. um what else I think the other thing is, like, the firms also notify us. They also need to identify and notify changes to the quality assurance board, because the QCR program, it works in a certain way that your partner needs to be covered over a certain period of time. The firms, a minimum 50% of partner needs to be covered. So for example, if your firm has changed, you have inducted a number of audit partners within your within your firm, then those numbers needs to be communicated to the QAB team on a timely basis. So just imagine if you have done your QCR, and after that you have a number of new audit partners have been changed, so the composition of the firm, the outlook of the firm has completely changed. So can we still call that firm a QCR rated firm? You understand? So from that perspective, there might be situations where an early review needs to be called on, and then they needs to make a new assessment whether the firm is still QCR rated or not. And that assessment needs to happen. The audit firms are not, most of the firm already require, but the QCR specifically require that the audit firms needs to maintain an audit engagement register where you capture the key data, like what audit client you have, and what auditor's report you have signed on, who's the engagement partner, who the EQCR partner is. So some brief data needs to be in there, because that ensures that assist the QCR reviewers as well, that also assist the audit firms to implement a lot of internal controls especially, in terms of the where to rotate the engagement partners. There are very strict requirements in the code of ethics and in the code of corporate governance for the listed companies and the other public sector companies as well. That after a certain period of time, a person is not eligible to be an auditor. So, all these things needs to be, if we build those internal controls within the audit firms, and as a APRS reviewer, if you are going in there, you also need to check in, whether the firm is capturing all the data, because that data will help you out whether the firm is adequately, kind of implementing those internal controls, which the standards require them. Okay. Inspection and inquiries by AOB. So AOB actually also performs, inspections of the QCRs and audit firms. So that's one of the statutory mandate that we have. So there are basically two areas. One is for the registration and deregistration purposes. So for deregistration, we primarily rely on the QCRs conducted by the QAB, but then we also perform our own inquiries and inspections of audit firms, and scrutiny of those annual returns which is filed by the audit firms. Within those annual returns, the firms submit us the all the audited reports which they have signed off in the last calendar year. They also send us a declaration they have complied with all the auditing standards and all that, and they provide us some information around that. So the scrutiny of that is carried out by the audit oversight board. Then there is a kind of investigative angle to that as well. So on a complaint, on a reference, on a so moto, AOB can also undertake inspections. So as a first place, we look at the QCR records. If the issue is being primarily addressed over there, we will look at that record. But if the records are not available, if those particular issues were not properly, look at that from the QCR, because QCR has a different kind of objective sometime as well. But we leverage that data, and then if there are need, then we also conduct inquiries and inspections of audit firms as well. Okay. um, that's the enforcement. So the AOB has a very comprehensive powers to impose sanctions on the audit firms, basically to create both a deterrence and encourage the audit firms to comply with these auditing standards. So this is the kind of list which we have in the primary act. It ranges from penalties, revocations, and all that sort of stuff which we have in the primary law. So this is the last year's some snapshot. In the 2024, so there were a number of actions that AOB has taken. So the board of AOB is determined that if there are instances that way we need to ensure that we shall enforce the compliance, then we will do that. We will not hesitate. And in the last year, a number of audit firms were penalized, and some partners were firms were directed not to assign the audits to certain partners. Reprimands were issued. So so that whole regime is that's the objective, to both create a deterrence and encourage people to reform and look at those issues, and then try to avoid that going forward from that perspective. um, so these are some of the issues which are in that enforcement which AOB took actually in the last year. So there were a number of issues where auditors actually signed the auditors reports without being registered with AOB. They were neither QCR rated nor registered with AOB, but they still went ahead and signed off the some listed companies, some other regulated entities by the SEC. So AOB took the actions after following a due process. Again, there were a number of issues in terms of the auditor's independence requirements. So if you look at the code, there is a chapter on the independence requirements of the auditor, and then it basically prohibit that after a certain period of time, if an audit firm has spent certain period of time, generally it's like 5 years for a financial services client, then the audit firm is required, is mandatory. It's not optional. You have to rotate that audit firm. If it is laid out in listed code of corporate governance, you must rotate your audit firm. There's no other option. And similarly, if you're a key audit partner, for example, if you're engagement partner or you're a EQCR, your other audit partner engaged in a public interest company's audit, then there are certain time periods that you have to rotate your those engagement partners. So generally, for engagement partner, it is 5 years, and then then you have to do a cool off period. So now the cool off period for engagement partner is around 5 years. You have to go into those specific details, which are available. Once we issued those orders, ICAP has also issued a very comprehensive communication. There is a complete guidelines available on the ICAP's website, which tells you for each entity what sort of the regulations are in place in terms of the law, and then when you have to rotate your audit firm or your audit partners. And then of course there were a number of issues, the accounting issues, the auditing issues, where there was material misstatements in the accounts of listed companies, which we have briefly laid out before. But if you have more interest, please feel free to go on our AOB's website. All of those orders are available on AOB's website, and you can go through over that. Okay. um, in terms of the remedies available, so the order firms, they can file grievances, they can file appeals under the SEC Act. So this is the normal due process of the law. So for the forthcoming, I think the upcoming things, I think, is the ISQM 1 and ISQM 2, which are now, the upcoming thing. ICAP has adopted them. For the public interest companies, they are effective from the 15th of December 2023. So that is the time you have to kind of do your initial risk assessment and put in place, and then within 1 year you have to actually ensure that all of those your controls are in place, and you have done a robust investment kind of evaluation of that, assessment of that. So ISQM is kind of the have a lot of similarities with ISQC1, but it is more risk based, it's more proactive approach into that. So as a reviewer, you must look into those things. I think it's very important. So a lot of these issues, for example, the issues which I try to elude, or which EOB was looked into the last year, were like, for example, acceptance and continuous is one of the main thing which these internal controls of the audit firms, they should be aware of when you have to rotate the audit firm. So if you don't have good internal controls into your audit firm, put in place, so that will seriously, hinder your ability to comply with those regulations. You need robust data. Data needs to be properly, checked, and need to be accurate and complete. And then based on that, those decisions for acceptance and continuance of your client shall be made. Your internal monitoring should be, robust enough that they can identify those issues before, because if those issues through internal monitoring are identified on a timely basis, it gives some chance to the audit firms to remediate those issues. But for example, if you have accepted an audit client, and if your internal monitoring identified that, hey guys, we were not eligible to be appointed or holding for that office, so before you go out and sign off that audit client, your internal monitoring might detect that issue, and it might trigger you to basically decline that client, and then you could just say, okay, we are resigning from that client. So this is I think that this is an area which we shall emphasize. The other thing which I really want to point out is the ISQM2. I think they have given too much emphasis, and rightly so, on the EQCR role, because it shall not be a tick the box exercise. So before an engagement partner signs off his or her auditor's report, they are supposed to, at least for the listed clients, they are supposed to get mandatorily get these reviews from an independent person within the audit firm, who's like a qualified and competent person. So that there is a lot of responsibility now on the EQCR. I mean, the way they have kind of portrayed seriously in the ISQM, no wonder we we might see, in addition to engagement partner's name, EQCR's name on the auditor's report as well. That could be a possibility. But but there is a lot of emphasis, and seriously, rightly is kind of being done from that perspective. So so I think that takes me towards the end of it. There are certain other initiatives that we are, kind of taking. AOB has, there was a joint committee between ICAP, SEC, and AOB. There are, numerous improvement, suggestions which have been given. That report is although it's not publicly available, but that is now with the ICAP and AOB and SEC, and there are a lot of recommendations that we are trying to, kind of implement and work on that. AOB has done surveys of the CFOs and audit committee and audit partners with good encouragement rates. Those surveys are available on AOB's website. It has given good feedback how CFOs, audit committees, and audit partners, foresee, the key issues in terms of the auditing. Not would not go into the detail. The last, but not the least, is the one of the work that AOB did with the World Bank, and the audit committee toolkit, because there's a lot of need for audit committee members to be uplifted, and they need to be, because they are kind of first line as well, because they are the ones who recommend auditors. They're engaged in the audited accounts. So this committee toolkit actually gives them some insights in terms of the responsibilities of the audit committees, and what sort of tools they can apply to monitor and oversee the audit from that perspective. So that takes me to the end of it.